A lot of numbers to throw around and to get some perspective on. So happy to have the president and CEO of Heritage Capital LLC, Paul Schatz, to talk about that. We'll get to all those in a second. I know you wanted to talk about the big news of the day. The second quarter gross domestic product came out 0.9%. It contracted. I believe that is an annual inflation adjusted rate, and that would be the second straight quarter we've seen a contraction. Mr. Schatz, your thoughts?
So I know the conventionally held wisdom definition, popular belief is that back-to-back quarters of negative GDP growth equals recession. I spent an hour this morning, I went down that rabbit hole fighting with people on Twitter. This is not partisan. It's not a Democrat versus Republican. I understand why it's easy for folks to just look at back-to-back quarters negative GDP growth is recession. That's not the case. Only the nonpartisan National Association of Economic Research, NBER, they're the official arbiter of whether we're in recession or not recession. They usually look, obviously, in hindsight, and they're normally late, but all the ingredients of an historical recession are not in place, although the economy is clearly weakening.
And some of those things that are not in place, I imagine, would be the labor market is still looking relatively strong, yes?
So that's where everyone, all the armchair economists are going, but. COVID screwed up the economy, the labor force, less people in the labor force, all these external factors. I get it, but you can't qualify indicators. You can't say, when Matt Scott says it's going to be sunny with some clouds, you can't qualify it and say, well, those clouds are dark, therefore it's not as sunny. That's not how it works. So the same thing with employment. Look, the unemployment rate is 3.6%. It's close to a 50-year low. And we created 372,000 new jobs in June. Whether you think they're real or not is irrelevant. That's what the data are. So it's going to take time to work off the jobs numbers. I do think unemployment peaked. I think we're going to slowly tick up and get above 4%. But I don't think, I look at some esoteric crazy stuff like what architects are saying in their monthly surveys and what restaurateurs are saying in their monthly surveys. And in those kind of esoteric numbers, we're still in an expansionary period in the economy, albeit a slowing period.
All right, so let me ask you a question. It's kind of a twist on what you were just saying. The NBER is going to be the ultimate arbiter of whether we're in a recession. That decision is going to not come for a while. So really, at this point, are we just arguing over a word, whether it's a recession or not? What's the difference? Like you said, the indicators are what they are. That's not changing.
Right. So people say to me, why are you being so, stupid or small-minded? I don't have a dog in the fight. It's not like I make more money or less money regarding whether we label this a recession or not. I came into the year with you guys. I said the economy is going to slow significantly. I don't see recession this year, but maybe late in the year. So we're wordsmithing. We know the economy is slowing. It doesn't slow evenly. We know technology stocks. We know Sand Hill Road in Palo Alto, tech capital of the world. They're hiring freezes. They're starting to lay off jobs. We know that's not good, but we know travel and leisure is booming. Yep. If there is recession, Tim, this looks like post 9/11, very uneven. Some sectors didn't even feel it. Mm-hmm. Or 1980, the last time we were trying to attack inflation. Again, super mild and not even. And I think that's where we may be headed late 2022, early 23. Some people won't even know we're in recession. Others, if you're in housing, perhaps Wall Street, and certainly technology, you're going to feel it a little harder.
Real quick, only got a couple more seconds. This latest 0.75 percentage point rise. How are people going to feel that and when?
Well, the stock market celebrated not many times in history where people celebrate rate hikes to that extent. But the average American, people watching now, if you have borrowing money on a credit card, it's going up. If you have a home equity line of credit at your bank, it's going up. All your short-term borrowing costs are going up. Your 10, 15, 20, 30-year mortgages are not going up. If you have money in a money market account, you're going to get a little more interest. If you've got want to buy, money in a savings account, you get a little more interest. But by and large, a 3/4 point rate for the average person is going to hurt a little bit.
There you go. Paul Schatz, President and CEO of Heritage Capital LLC, joining us to give us his vast knowledge on a very confusing set of topics. Good to see you.
Nice tan.
Thank you.
Good tan.
Thank you so much. That's all I got.